The accounting cycle, or what I like to call it, is the circle of life. I'm just kidding. It's the accounting cycle, the circle of life. It's so much more important. Anyhow, it all starts off with business transactions. And what I mean by business transactions is anything that you have done in order to make money, right? So an example of that would be you made a sale of a product that you have generated. That would be an example of a business transaction. Another example of a business transaction is perhaps the purchase of raw materials in order to make that finished good, if you will, in order to sell. So all of these are business transactions. Another example might be that you purchased raw material, you recorded it down, but you recorded it wrongly, and perhaps, some of that raw material was unusable. Anyways, you have to make sure that your inventory number is accurate to what you actually have. The business transaction would be the adjustment of the value of your inventory. That's another example. Whatever business transactions that have occurred in your business, you need to record them, and eventually they're going to hit one of the subledgers. And so an example of a subledger would be if you made the sale of a product, it would likely hit accounts receivable, which means that you have sold the product, you're expecting money to come in, but it hasn't come in yet. So you're going to write a note down saying this person owes me this much, and it's going to be recorded in the subledger called accounts receivable. On the other hand, if you were to have purchased some raw material, you might want to record that in the subledger called accounts payable. Chances are you don't necessarily need to pay it right away. And so the accounts payable module is kind of like an IOU system where you write down, you make note of how much you owe and to whom you owe whatever you bought, and that would be the accounts payable side. And so all of these transactions, once recorded in the subledgers, are going to find their way into something called the general ledger. And the general ledger is simply an umbrella that encompasses all of the subledgers and all of the business transactions that have gone in on your business in order for you to summarize your books, to be able to create financial reporting. And so one of the reports that are very popular to run is called a trial balance, which is the third bullet here. A trial balance is really a fancy name for a data dump, a laundry list of all the values in each of your accounts. So when you run the trial balance, you're going to see the amount of money that you have recorded in each and every account. It's just a big, huge list of accounts and their values. That's basically what it is. And so the next step is when you say completed the month, you want to make sure that you're summarizing all of the business activities that had gone on in the business. And part of the tasks is to reconcile key accounts. And so what that means is you basically want to make sure that the recording of all of your business transactions is indeed accurate to what was done. You want to make sure that at this point there weren't any business transactions that you haven't recorded yet, or that are still in transit and that are on the way to the books, or we just want to make sure that these accounts are, as I said, accurate to the business transactions that have transpired through the months. And so once these key accounts, and what I mean by key accounts is that you're going to want to make sure that your accounts receivable is showing the same value as what was migrated to the general ledger, right? So you want to make sure that the subledgers equal to whatever that was in the overall umbrella of the general ledger. That's an example of a reconciliation of a key account. And so once you have determined that the subledgers are indeed true to what happened in business and true to what it shows or what had moved and summarized into the general ledger, you can then close the subledgers because you don't want any more transactions to run through that month. Otherwise, it's going to screw up your books. So you want to make sure that all of the subledgers are closed and true, they're accurate, they're closed, and then we close the general ledger. And so typically in a month-end cycle at a very high level, closing the general ledger is going to be one of the last things that you do. But the final stage is to, once you're satisfied or once the accounting group is satisfied with what is in the general ledger and that the subledgers are all closed, we are now ready to create financial reports. And we'll take a look at a few different types of a few of the more popular financial reports, the balance sheet, the income statement. These types of reports are going to be key for every single type of business out there. It doesn't much matter. I don't care what industry you're in. You're going to have a balance sheet. You're going to have an income statement. You're going to have a cash flow statement. And we'll take a look at those. And so the final piece to the accounting cycle is that the accounting group will present these reports to whoever needs to see them and do some analysis on how we can, as an organization, improve or how we are actually doing in relation to how we expected to do in terms of our budget. Various different types of analyses will happen at this point. And so that and then we start the entire cycle over again the next month. So that's the accounting cycle, and we're going to move on to the next lecture.